Today, we're going to break down a really fascinating and, honestly, a pretty terrifying theory about the crypto endgame. We're talking a final, absolutely massive boom, followed by a devastating bust in a complete financial reset. So, let's just dive right in.
And look, this isn't just some random opinion. This comes from macroeconomist Henrik Zeberg, who's been calling these market cycles with some pretty shocking accuracy. He's convinced we are living in the biggest speculative bubble in human history. And what do all bubbles do? Eventually, they pop.
So what's fueling this thing? It's this massive paradox. On one hand, you've got the financial markets, total euphoria, hitting all-time highs, everyone screaming, this time is different. But on the other hand, you have the real economy, which is just getting hammered by inflation and debt. And that disconnect, that's the key to this whole story.
All right, so let's dig into this disconnect, because according to this theory, it's the single most important piece of the entire puzzle. You see, it explains why the bubble is still able to grow, but it's also the very reason its collapse is, well, inevitable.
To make this idea easier to grasp, analysts use this really great metaphor. They call her Mrs. Johnson. Now, she represents the huge majority of people, the 70 to 80% of us who aren't glued to stock charts all day. She's busy juggling a mortgage, car payments, and the insane cost of groceries. She is the real economy.
And here is the absolute kicker of this whole theory. The fate of this multi-trillion-dollar bubble, it doesn't actually rest with hedge funds or central bankers. Nope, it rests with Mrs. Johnson. The moment she can no longer afford to spend, the moment her confidence finally shatters, that is the pin that pops this entire bubble.
But before that happens, the theory predicts one last, absolutely insane rally. A final speculative frenzy that's going to suck everyone in and push prices to levels that just seem impossible right now. This is the blow-off top.
Some analysts have a great name for this. They call it the banana phase. When you look at a chart and it just goes vertical, kind of like a banana, it's all driven by this one powerful belief that no matter how bad things get, the central banks will just print more money and save the markets. This, the Fed's got our back mentality, is what fuels the most dangerous part of the whole cycle. So how high could things go? Well, the predictions are pretty extreme. For Bitcoin, some analysts are targeting $180,000. I know, it sounds insane, but in that final euphoric melt-up, these are the kinds of numbers they argue are actually possible.
And it's not just Bitcoin, not by a long shot. The targets for Ethereum are just as wild, with some models predicting a peak of $20,000. This wouldn't be just one asset going up. It would be a massive, market-wide explosion.
All told, the total value of the entire crypto market could swell to a staggering $12 trillion. To put that in perspective, that's 4 times the last peak back in 2021, and it's all predicted to happen in a very short, very explosive period of time. And then the party ends. The theory is crystal clear on this point. This isn't a maybe, it's a certainty. The largest bubble in history is predicted to have one of the most painful, devastating crashes we have ever seen.
I mean, when the money printer turns off and everybody rushes for the exits at the exact same time, what does that even look like?
The forecast is basically a repeat of the dot-com bust. For the tech-heavy NASDAQ, that could mean an 80% drop from its peak. That's not a correction, folks. That is a complete and total wipeout of an entire decade of gains.
And for crypto, the picture is just as brutal. A Bitcoin price that could have peaked near $180,000 could come crashing all the way down to around $16,000. We're talking a 90% collapse, wiping out a whole generation of investors who got in late.
In a crash this bad, it's not just about prices falling. The entire system could freeze up. They call it an Ice 9 scenario, where all the off-ramps just close. People literally can't sell, they can't get their money out, and the whole financial system just grinds to a halt.
Okay, so the system freezes. The central banks just step in and save the day again, right? That's what they always do. Well, according to this theory, no. This is the moment when everything changes. This is why this time is different.
So here are the dominoes they expect to fall. First, markets crash, hard. Then the central banks react like they always do, flooding the system with new money. But this time, that money doesn't actually kickstart the real economy. It just creates massive inflation, because Mrs. Johnson is now too scared and too broke to spend. And this is the absolute key. For decades, central banks could print trillions of dollars without causing crazy inflation. That era is over. Like Zeberg says, the genie is out of the bottle, so now they're completely trapped.
Either they print money to save the markets and risk hyperinflation, or they don't print and let the entire system collapse.
So, in the ashes of this giant financial reset, what's left standing? This is where the narrative pivots from total destruction to a kind of rebirth. The crash, it turns out, serves a really important purpose: to finally separate the hype from actual real value.
Right now, there are thousands and thousands of crypto projects. Let's be honest, most of them are speculative fluff with no real-world use case. A liquidity freeze would be like a wildfire tearing through a forest. It would burn away all the deadwood, leaving only the strongest trees standing, maybe just 10 or 15 projects in total.
The difference between what survives and what dies becomes crystal clear. What falls apart? Anything built on pure hype, memes, and stories with no substance. What survives? The projects that provide actual foundational infrastructure. Things like settlement rails, platforms for tokenizing real-world assets, and technologies that are already being used.
So the final takeaway is really this. The crash isn't the end. It's actually the catalyst. It wipes the slate clean so a new financial system can be built, not on speculation this time, but on the real-world utility of the technologies that actually made it through the fire.
And that leaves us with one final and kind of provocative question to think about. The same institutions that benefit from these huge boom and bust cycles are also the ones building the infrastructure for this new system. So it really begs the question, are the architects of the crash also building the rescue boat?